Tiger.
Ready? All right. My name is Nick Spoltore, and I'm in the telecom sector. I did AT&T this week. Go to the company overview. It's in the telecommunications sector. The industry is communication services. As of January, they had over 310,000 employees with all the subsidiaries. The customer base is residential, business, and government.
You look like Spider-Man.
How do I look behind bars? The five major segments are the local line exchange, long distance, wireless, broadband, and internet networking. AT&T is led by Randall L. Stevenson, Chairman and CEO. For financial performance in 2007, they have strong cash generation with $16.4 billion in free cash flow, more than $19 billion in returned value to shareholders, which was buybacks from last year. They had double-digit growth in adjusted earnings per share for 11 straight quarters, and you can look at reported EPS. And then they have adjustments for EPS, which was the merger with mobile AT&T. Next one. You can see this is the operating revenue breakdown for 2007. 33% for the wireless service, 35% for the wireline voice and data, and 20% for the data network. You can still see they get most of their income from hard line still. This is the last tick of yesterday. It was 35.96, probably down 2.5% right now. 52-week lows around 32.95. It's probably where it's going to be by the end of the day. They had strong subscriber growth, 12% for the year. It was 7.3 million subscribers added. They set an industry record this year. For one quarter, 2.7 million additions to the wireless network. Next slide. I'm just gonna. This is the graph. Show you like specific points of where stuff happened. AT&T issued here that they wanted to get out of the payphone business. It's a dying field. You can see the price went up a little bit, and they reported consumer sales drop here. And they released solid fourth quarter earnings here and shot them back up. Let's see. Oh no, that's right here. Sorry. Excuse me. This is the Verizon AT&T price war. Yeah, it is. Okay. All right. Next slide. All right. This is some of the cutting edge devices they sell service to. BlackBerry, the iPhone exclusive. They do more than one BlackBerry. Some recent news: the company announced it would increase its dividend, or excuse me, its launch a new dividend policy where they're going to do a buyback, 15.2 billion shares. It's a repurchase plan. I'm sorry, and let's see, they're going to purchase up to a 6.6% share. So you can tell the company believes that they're undervalued right now in the market. That's why they're going to do the.
What would be an entry price on?
The entry price?
Yeah, if you go back to the slide before.
I would enter.
And based on technical, you love technical, so you tell us.
I love technical, but I did this PowerPoint at 4 o'clock in the morning, and I have no technical on here. So I have no entries. But I compared it to the peer group. When you look at price to earnings, they're lower than the peer group, which would consider that they're oversold. I looked at the debt equity ratio. They're such a huge company. They're killing their debt equity ratio is really good. And you look at there's a 1-year estimate for return on equity, and I don't know why that goes down. To be honest with you, I really like the company. Next slide. All right, my recommendation is to purchase long and hold. The stock has the ability to outperform. They have effective management. They're going to be upgrading all their fixed service lines, and they're going to be offering video in the future. And they released some press statements that they won't be able to they won't use a lot of their capital to do all the upgrades. So I believe this stock could be very profitable. I mean, it's a stock that you're going to know is going to be around the next 25 years. Where's Verizon going to be in the next 25 years? And I believe the stock is oversold due to recent market turmoil. I think we should get into it and dump Verizon. Thank you.